Good morning. Good morning, everyone. It is Monday, April 27th, 2026. New day, fresh start, new week, I should say. Welcome to the Pitbull Traders Morning Game Plan. I'm your host, Manny. The purpose of this show is simple: live futures trading, real-time technical analysis, and actionable setups, all with the focus on trader education and mindset designed to drive consistent profitability. Every morning we come in with one goal: to build out the structure before the open so we're operating in alignment with the day's dominant forces, not guessing, not chasing. All right, so let's map it out. We have a new week here. Let's jump right into the charts. Starting off on the 4-hour on a higher time frame, we're going to start off with the 4-hour chart and just go through the progression. Let's see here. Okay. Hang tight. Let me get this set up. All right, guys, let's map it out. 4-hour time frame on our highest time frame. Obviously, we're this morning and the overnight session, the trade has basically been contained over the entire last week. It's hard to see here on a 4-hour chart, but we've been contained pretty much between 7,100 and 7,180, right? So the 7,180 band. Let's just tighten this up a little bit and remove these. Keep the targets in there. All right, so basically we've been oscillating between 7,100 and 7,180. It's today we break out. Well, I think price is trying to do that right now, right? We're trading 7,188, which is clearly above our spike high. And that spike high happened, believe it or not, that was a while back. That was on April 17th. So on April 17th, that was the last day of the impulsive move higher, where we came high. We traded as high as 71.8575, and thus since then, price has just been consolidating in the range described earlier, 7,100 to 7,180. We're testing in the upper portion of that band, so we have to be on alert, right? Are we going to break out, or are we going to fall back into range? I mean, let's keep this simple, right? Above 7,180, we have to look at 7,180 to 7,150 to 7,180 as a support band. I know that's wide, but that's kind of the higher time frame. What the higher time frame is telling us. Once we drill down to the 15-minute, we'll be able to isolate a little bit closer and tighten up those ranges and give us something a little bit that's less, that has a smaller risk band. All right. Check this out here. All right, cool. Okay, so here we are right now trading 71.85. Let's outline the most bullish outcome and then we'll go into the most bearish outcome, or a bearish outcome. All right, so trading 71.80, we're back into Friday's range. So say we open 71.88 and we get an opening drive higher that takes us above yesterday's settlement, because we're trading below Friday's settlement. We're also trading below Friday's volume point of control, which is the price where the most volume transacted on Friday. That would be 71.93, with our settlement being 71.94. So let's keep it really simple, right? We break out, we get an impulsive move higher, an opening drive type look where price opens and just immediately starts ramping higher. As we do every day, we'll write down the opening print. That's the first price traded at the 9:30 open, and that's going to be our fulcrum for the first half an hour to gauge whether we are trading above it, and which would imply a more bullish movement, and if we're trading below it, a more bearish movement. So if we trade above, if we open 71.88, we get above the settlement and above the volume point of control at 71.93 quarter, settlement 71.94. Can we get above those? And we'll know it on the open if it's an impulsive move higher, because price will just cut right through those and immediately get above yesterday's high. So do we get above yesterday's high with strength and momentum? And we'll know it if we see it, right? Because it'll be a fast move. It'll be one candle print that gets us above. So do we get above? And in that event, can we get a pullback that gets us closer to our risk range? And that risk range being the volume point of control, 71.93. If we get a pullback there and we see consolidation, then we can look for long trades with a target being the overnight high. The overnight high is currently at 72.08. All right, so we have a somewhat compressed range overnight, with the overnight low being 71.71 and the overnight high being 72.08. We have a 30, almost a 40-point overnight range. So let's look for strength and momentum off the open that gets us above Friday settlement, right? That means screens go green and everyone will start, most long positions will feel justified. They'll feel emboldened. And does that move gain a following above Friday's settlement and above yesterday's high at 7,200? At that point, we can start looking for pullbacks that get us long, with a target being the overnight high, and potentially a breakout of this range we discussed earlier that we've been chopping around in for the last, for all of last week, 7,100 to 7,180. So that's the first thing we're going to look for. We're going to look for an opening drive higher that gets us above through the settlement, 71.94, gets us above yesterday's high, 7,200. At that point, we can gauge the strength and the momentum of the move, and we can start looking for long ideas that get us long, with our first target being the overnight high. The 96% statistic will be in play there, and potentially a move higher, and that gets us, into blue sky territories. I mean, we're at all-time highs right now. So there really is no structure or any targets above there. At that point, we would just need to take our scales in a prudent manner and make sure we tighten up our risk, and then gauge the strength and the momentum of the move for follow through. Okay. So do we get an opening drive that gets us through the settlement, gets us through 71.94, and then potentially above yesterday's high at 7,200? At that point, we can start looking for pullbacks to get long, targeting the overnight high. Okay, so now let's discuss the same scenario, but let's say that we fail. We fail to gain a following above yesterday's high, right? The trap trade. We all know how much ES loves to trap, right? If you've been trading ES for any amount of time, you'll know that, clean moves are harder to come by. All right, so let's discuss, what if we get the same look on the 15-minute chart that gets us above yesterday's high, fails to touch the overnight high, pulls back for a retest of the settlement, and at that point, we'll have to gauge any bounces for traction or to gain a following. And if that fails to gain a following, if we fail to show acceptance above yesterday's high, 7,200, at that point, we would be back into Friday's range, right? And that would be a big tell that the breakout is not gaining a following, and that it's a lower probability that we can trade up to new all-time highs, or even for a potential test of the overnight high. All right, so let's be on alert for that. There's two ways this can manifest. We can get above yesterday's high or even above the overnight high, fall back into range, And at that point, we can look for short ideas or short entries with our risk marker being the overnight high and for a move potentially back down to the settlement. Okay? Same scenario, if we break out above yesterday's high, fail to touch the overnight high, and any retest of yesterday's highs fail, then at that point we could look for the same short entries with our backup against our risk marker being yesterday's high, and at that point we could look for short scalps right back to go right back into Friday's range. So the most bullish scenario, and we have two trap ideas for just in case we fall back into range and the market's not ready to move out yet. Okay, so stay on alert for that. All right, so now let's cover the bearish argument, right? Say that we do not get an opening drive higher. Say that instead of getting that opening drive higher, we just come right back into range and price is selling right from the open. We're gonna know that too if we're monitoring the daily open, the open print, right? The open print is the first price traded at the 9:30 open. So do we get that look where we start trading immediately down? And the first thing we're going to want to monitor there is the Globex open. Okay, so the Globex open, like yesterday's, last night's 6 p.m. open, which is earmarked at 71.85. Let me just fix that here. Right, 71.85. Sorry, guys, that was late this morning. I had a pretty busy weekend. All right, so say we fail to get directly off the open. We see selling right off the open. We're trading below the open print. At that point, if we're opening here, we're basically only 2 points above the Globex open, right? So if we get that move lower and we start trading immediately below this low pivot here at 71.81, and there's near a bounce, then we can start looking for any pullback that gets us short with our backs up against that Globex open, 71.85, 71.81 being the lower portion of that band. We can look for short ideas or short entries with our risk marker being the Globex open or even the opening print, and we can look for lower trades down that get us to tag the overnight low at 71.50. Also, very conveniently is value area low right in that band, so they're 1 point apart, and that's going to give us. I love when these areas are stacked, right? Because if you cut through them, it gives you a good idea of what the market's intention is. But if we trade down there and we see price start chopping back and forth, trading above it, trading below it, we can start looking for consolidation. We all know how ES, when it sells, it's a hot knife through butter, right? So we're gonna know it if we see it, and at that point, if we do get that look, then ultimately, if we cut through the overnight low, then the target then becomes yesterday's low at 71.45. That trade's got a lot more skin in it, right? So we would be gauging the strength and the momentum of the move lower, seeing if we get a bounce in that zone, 71.81 to 71.85. Any pullback or retracement into that area that fails to gain any upside momentum, then we can look for short scalps that get us down to the overnight low at 71.71. Also, and then at that point, gauge the strength and the momentum of the move for follow through with a potential target being 71.45, Friday's low, Friday's regular trading hours low.
Morning, Manny.
Okay. So another scenario that we have to cover, that we always cover, because price can do only three things, right? It can go higher, it can go lower, or it can go sideways. And we know that very well because that's what it's been doing for the last week, right? So say that we get a move lower, we test this 71.81 band here, right? And then price trades lower, but then immediately retraces and comes right back into range. Well, that's going to give us an opportunity. We have to start thinking much smaller targets. We have to start thinking more about scalping for smaller targets because the market's just consolidating within the larger range. Okay, so if we trade below 71.81, 71.85, come back into range, then we can look for a higher low. Let's clear this out. Let me just get a snapshot of this for my review. Let's see. All right. It's getting a little messy up here. Clean it up, Manny. All right. So say we get to move lower. Okay. And price fails to gain any traction below 71.81, comes right back into range. We start looking for a higher low to get long scalp to get back up to the settlement, with our entry being just off that higher low. Look for bullish candle closes, and our risk marker being whatever local low formed on the move lower. Okay, and that would kind of cover that covers exactly the sideways move. Another way that can materialize is the same concept, except that we get below the overnight low. So we trade lower, we get below the overnight low, we look below it, we fail to gain a following, we reclaim it, maybe potentially even get a fade off of it that gets a slightly lower low, but that low fails to gain a following, and then we come back up, reclaim it. At that point, we get that inverted head and shoulders look, and we can look for long entries on the break of whatever these local highs are. We can start looking for long ideas with a potential trade or a potential entry on a break of a trend line that would form. So we get the inverted head and shoulders, and then confirmation on the break above whatever local high has formed. We can look for long scalps right back up into test the daily open, and ultimately to go up to testing the settlement and Friday's volume point of control. Okay, so I think that outlines pretty much the most bullish argument. Two trap ideas above the yesterday's high or above the overnight high. We also covered the most bearish argument, right, where ES just hot knife through butter, gets right through the overnight low with strength and momentum, and we can gauge any pullbacks there with entries down to yesterday's low. All right, so there goes the opening bell. Let's get into it. Immediately, the first thing I'm doing is I'm writing down the opening print. I want to make sure I know exactly where that opening price is, right? Okay, so that open print, 71.86 quarter. Oh, hey, Tom.
Hey, good morning.
Sorry, Tom. I did not hear you. I had you muted.
I had the most important things I was talking about, and you just never.
Oh, sorry, Tom. So sorry. I was just
no. It's all good.
Completely.
No, actually, I was having problems on my end. So
okay,
all good.
I can hear you now. Sorry about that. Oh, that was terrible. Okay. So that covers it for me. Maybe I'd love to hear what your thoughts are here coming into the day.
Yeah, it's you know what? You take a look at the market, and this is a 30-minute chart of the E-minis. If anybody's focusing in, I just want to take the session profiles off, and if I put a distribution profile, and just going back from a week ago Friday, and put this balance area, make a distribution of this, you have a very low. You kind of have two distributions separated at the 71.81 level, right? So prices were bouncing above that. They ticked above that. And when I put the sessions back in, it kind of shows you here on Friday Friday's action broke above, and after we broke above, it was pretty early in the morning, like 11:30 you guys time in Eastern time, and kind of just went sideways. This morning we dipped below, and we're above that. I think that's kind of it's going to be a little bit of a kind of a no-go trade. I want to stay positive, bullish above this line. If it breaks below, it may be rejecting the prices above. But the way it looks right now, it's, staying above that, we're fine. But, this morning was kind of quiet. Yesterday afternoon was pretty quiet, pretty tight range. So that's my thoughts of that. Is just kind of agreeing on exactly what you were saying about most of your levels. I was in and out. But if it gets below this 71.81 level, we could start rotating down towards the 7,087 level. But right now, just as long as it's staying above this level, I'd be a little bit more leaning towards the bullish side.
Great. And just to remind the viewers, what level is that again?
For the 71.81 level.
71.81. Okay, great. Yeah,
that's kind of it just shows when you merge distributions or merge days, you get probably a little bit better idea of what the markets are saying their distributions are. And the low volume areas, and that's all I did here for the people who are, I did that, and there's a very low volume area. And as you can see, it's been the top, and as it broke above this on Friday, stayed above it. This morning tested below and pushed higher. So that's what the market's saying is somewhat of a critical level. The 71, let's say 71.80 level, 81 level. So it's not precise as a trend line.
Yep, that makes sense. Let
the market tell you what's significant.
Correct. And a heads up here, we're expecting an early morning high on our execution clock, so just be mindful of that. Let me just get this chart going here, and then we'll see. So thus far, the first thing that stands out to me, guys, is let's get a clear read on the internals, because the first thing I'm starting to notice here is now how we've traded through the open. We opened, we traded lower, immediately bounced off of that's within that band we highlighted at the open, right? So we were looking at 71.85 to 71.81 as a potential area for a go or no go trade, right? Bullish above, bearish below, and price made a low of 71. Let's see, what is that? That is 71.83, right inside that band that we outlined. And the market's looking for an early morning high here. So let's, it's the start of a new week, right? So let's be patient. Let's be mindful of the broader context. The market is trying to make an attempt to break out of the week's range. And as Tom can appreciate, our job is, what is the market trying to do? I know Tom frequently talks about,
yes.
What is the market trying to do, and is it doing a good job of doing it? Right? I think that's plagiarized that from you, Tom.
No, it's exactly it.
All right, so now, guys, we're above the settlement. Screens just went green around the world. Everybody's bulled up, new all-time highs. Let's go, right? But not us. We know what we're looking for here, right? We need to cut through 71.80, 71.93. We need to get above yesterday's high, 7,200, for any really really bullish type action to materialize. Other than that, we're just trading in between in the overnight range, and we're still in Friday's range. Nothing new here, just chopping sideways. And we outlined also what the sideways argument might be. So let's just be patient here. Remember, it's a new week, right? We're starting out a new week. So let's not rush in there. I know, I've come into new weeks, and I've, done my homework over the weekend, and I'm excited, and I'm reared up, ready to go and execute my plan. But with an open like this, I think it's prudent to be a little bit more cautious.
Yeah, it's a little choppy. But look at Intel testing Friday's highs. Rich is pretty happy.
Yeah, for sure. Heads up here. So we have a divergence here, guys, where the Russell is breaking out and the NASDAQ is not. NASDAQ is kind of struggling here. No tell from the VIX yet. Let's see what crude is doing. Crude is up 2%. Yeah, up 2%.
Which, over the last few weeks have been putting pressure on the market. But it's kind of like earnings have been good. Earnings have been really good so far this first quarter.
Yeah,
it's a real busy week.
Oh, for sure. Yeah, I wrote about that in the trade plan. It's going to be really, really, I think this week we're going to see, if the market is going to break out, we'll see it this week. If the market is, if we're going to go into a distribution phase, I think we're going to see that this week. Just with this amount of news, position traders are going to be looking for this type of environment to either add to their positions or take profits. So let's just be mindful of that.
FactSet. I use theirs. I don't know for anybody looking for to monitor earnings. FactSet does a nice job. They got a free subscription monitoring earnings and how they're coming out, where they're projected. They do a real nice job.
Yeah, yep, I've used them before. Good call there.
Yeah, crude's kind of drifting up towards. I think we got a distribution at 101, so we're about 5 points off of that. But it's it came down and tested the lows of the distribution and just kind of sideways right now. So it's not giving us much of a heads or tails on which way it's going to go.
Give me a sec here, guys. I'm just trying to get the trade plan visual going here. Hang on. Okay.
Yeah, again, we're starting to test Friday's highs. Let's see how that reacts there. I kind of change this for just a regular session. It cleans it up a little bit on the E-minis. And let's see how the reaction is at the top of the range. What was it? It's basically 7,200. Is that the high print?
71.9850 is our current high, and our low is down there at 71.83. So yeah, pretty much what we outlined this morning, guys. We came down, we tested into that 71.85 to 71.81 band immediately. And I think it's prudent to point out that what we're seeing here is a lot like what we saw last week. It's just, it's a lack of sellers present in the market.
Look at it. It's just kind of stuck in this range. I just pulled it I don't know if you heard, is just the regular session. And we're pushing towards the high of that. So we're kind of stuck in this tiny range here. Trade accordingly. If you have the need to revert to mean type trade right now, when you're breaking out, and experience has taught me, is it takes a lot of energy to break out of a distribution or start a new distribution. And right now we don't have anything. Today's session is just kind of quiet, not moving one way or another, indecision. So traders aren't putting big bets on one way or another, and use that tone.
Correct. Yep.
Possibly short here with a break above as a cover, but it's just sideways action.
What makes this what makes this pretty simple, guys, is having this, essentially an entire week of consolidation, of sideways movement, right? We spoke about last week how we have to analyze this area as more of a less of a pullback, but more of like a pullback in time, right? Price just going sideways, digesting, and that's bullish. Surface wise, that's bullish unless we have something else that's telling us that it's not. I think we need to stick with the trend. However, it's easy to tell here that the market is kind of struggling, and I think that the one level that matters, the two levels that we need to gauge are yesterday's high 7,200, and do we get above that with strength and momentum? And on the lower side, I think we can use 7170 as our go or no go line, right? So if we get below 7170, all of these early buyers are wrong, and we can look for a test of yesterday's low at 7145. It's that simple.
Yeah, it's drifting. It just doesn't.
And if this is going to be a chop shop day, if we're going into the chop shop, guys, you know what we have to do, right? In the chop shop, you scalp the edges, or you get chopped to pieces.
Yep.
You get chopped to pieces trying to buy breakouts, or trying to sell breakdowns, right? So just scalp the edges, and that's and take your profits quickly.
That's one of the things is you kind of learned of reading. The quicker you could read the personality of the market. Now it will change during the course of the day as events unfold. But if you could get a good idea of the personality, excuse me, if you could get a good idea of what the personality is of the market, you just take advantage of it.
Yeah, good call. Yep, I agree.
I know a lot of people that make a lot of money coming out of the open, but I've gotten cut up taking the first trade in the morning.
Hey, you know what? No, that's serious. I am a shitty trader at the open. I know it. If you guys are really good at it, I have at it. I've just never been good there. I know my strengths. I know my weaknesses. I suggest you get in tune with what yours are, because that can save you. They can save you a lot of money. So immediately, guys, look at what happened. So price traded up as high as 71.9850, right? Couldn't even test yesterday's high, and now we're back below Friday's settlement. We're back below Friday's volume point of control. Okay, so now back through the open print, which our open print is 71.86 quarter. We can gauge two things, right? One, buyers were unable to gain a following above the settlement, above Friday's closing print. If we get back through the open, that can be a big clue that we're going to test lower. If we fail to get below the levels outlined in the pre-market prep, 71.81 being the lowest band, then the scenario that's on the table is chop shop. We're going to go sideways. Okay, but right now, let's watch what price does at the open, 71.86 fifth quarter, right? And we're going to gauge that level. Does it cut through? Does it slice through really quickly for a move lower? We'll see. Thus far, the one thing that we can tell from this open is that it's going to be choppy.
Yeah, I'm not looking at the stock sectors. And again, I use State Street's. You got 1, 2, 3, 4, 5, 6 negative and 5 positive. So again, confirming sideways action.
Yeah. Watch that 71.86 quarter. I think we're going to trade right below it. It looks pretty good here. That the chances are we trade below it, but we'll see. There it goes. Bye bye. See you later. Nice little scalp there. For anyone that caught it, all right, we know what we're looking for here, right? Watch that 7181. We just bounced off of it. And
yeah. What was the low on that? Yeah, yeah, that's at 7180 I talked about as far as distribution this morning.
Yep.
Yeah, it just touched that and bounced right off of that.
Yep, that's exactly the level that Tom outlined this morning, 7180. No surprises there. Guys, you're in good hands over here. Just write the numbers down, monitor for continuation. We got this tape licked.
Famous last words. Yeah, I got this figured out.
Yeah, I got this figured out. I've only ever had the market figured out for about 30 seconds.
Yeah, that's you know what, you should feel lucky.
All right, but hey, I think that what we have to note here, right? Okay, so the Russell tested up. It's tested its prior day high and failed. So looked above it by a few points, came back in. NASDAQ is weak. We're back through the open print. So as far as the ES is concerned, right? We showed an inability to test yesterday's high at 7,200. So now we're back into Friday's range, and we're testing the lower portion of Friday's distribution. Okay. So the one level here that matters, guys, the most important level was the level that both Tom and I outlined earlier, 7180.
How was baseball this weekend?
Oh gosh, yeah, we just got back late last night from Valdosta, Georgia, and just happy to announce my team won again. We won. I got here another ring to add to the collection.
Nice, in spite of the coach.
Yeah, no, I played all 9 positions myself. No, but I was sharing with someone this morning that it was. Man, I was really tired because it's a long drive, and you kind of get depleted because, if you win the tournament, that means that you're playing deep into Sunday night, and you probably got to the park at 8 in the morning, and you're not leaving until sometimes 6, 7, 8 o'clock at night. That was what we had last night.
Long drive.
Yeah, and then like a 7-hour drive, and you just emotionally wasted. You're tapped out. The kids are sleeping, right? So that's good for them, but no sleeping for me. And I got home and I just collapsed.
Been there. Fun. That's cool. They give the kids rings. They give all the kids rings.
Yeah, so I think that they kind of like substituted that now for trophies. That's what the trophy is.
Yeah, that's pretty cool though.
Yeah. I have there's we joke now because I have 2 teams, and we've won quite a lot of tournaments. One of my kids has like 24 rings that she's won. Yeah. And so she has, I told her, you ran out of fingers. But they kind of, we tend to coach in a way that says, hey, you know what, let's not focus on getting the ring. Let's make sure that we're playing well, that we're hitting our spots, that we're following, we're getting better at the things that we outlined in practice. And that's really what the most important part of it is for us. And the team, because then everything else falls in line. And so obviously we're winning, and that's fun. But the kids are really getting better, and that's exciting. That's really exciting because being where we live in Tampa, Florida, it's a youth sports hotbed. I mean, it's just like you could making your high school. We joke often that making your high school team is like making a Division I team here, just because the sheer amount of talent in the area is insane. So we have to play well. And in order to win, it's earned. But yeah, so guys, we're now right back 71.83. We're testing that lower portion right here, right?
Kind of drifting.
Yep, this is This is where you don't want to initiate a trade, right? Because if you're
No,
getting
it's
short, you could get a bleed through, which it looks like that's what the intention is here. And if you initiate a long, well, you could initiate a long and put your back up against the 7180 low,
yep.
and that might work. At least your risk is clearly defined. Okay.
Bitcoin's kind of did a little bit of a bounce off of that. I kind of cut my trade a little early, but trying to find a little bit of a bounce. But you don't hear people talking about Bitcoin that much anymore.
Yeah, that's a good point. You're absolutely right about that. It was all, about a year ago, it was all anyone would talk about.
Mm-hmm. That's one thing about this experience. They come in and out of fashion, that's for sure.
Yeah. All right. So that looks like that little scalp long off of that low worked. As soon as I said it, I just took it. But I scalped it. I'm not going to stick around very long here. So I got 3 points on the top side.
Yeah, that's nothing wrong with that.
Yeah, it's lunch money. It works. I'll take it.
Better in your pocket.
It's yeah, good point. But you know what? It's also I think it's, for, at least for me, it's important to start off with with a win on a Monday. Just winning begets winning, and so I don't have I try not to hit it out of the park on the Monday morning, especially with a tape like this. I think it's better to be a little bit more cautious and take small wins. But that's just what
baseball
works.
analogy, just making contact, right?
Yeah, exactly. Just put it in play, see what happens. Force them to make a play.
Yeah, it's doing pretty much what we talked about. It's just kind of drifting one way or another. It doesn't have.
Now I'm regretting exiting the position. I mean, but that's part of it, right? Like, it's rarely, you're going to get everything you want out of a trade, right? But yeah, whatever. Okie dokie. We bounced right off of the area where we said moving higher. Of course, could have held that a little bit longer.
Yeah, crude's pulled back tiny bit.
Let's see. Okay, so we got internals are still mixed. 2-1 positive on the NYSE, 1-1 negative on the Nasdaq. Russell looks like it's grinding a little bit higher, and there's a huge buying tail in the Nasdaq. So I'm not reading too much into any of this. I think it's just choppy sideways, guys. Choppy sideways. We're looking for that AM high. That was the reason why I took that scalp long.
And the tempo of the trades are just very slow. That's just another key is what kind of cadence is the trade showing? And it's, this is not one stepping one way or the other. It's just, just little chops here and there.
Yep. Let's continue to watch here. See if we get a breakout higher.
Yeah, this when you look at just the regular session, it just cleans up the chart and takes a lot of the overnight noise out of it. Man, since you do more, what's important on the electronic trading, the overnight sessions that you look at?
So the overnight session, I'm going to so typically like, where do we open? Where did the 6 p.m. overnight session open
Hmm.
relative to the prior regular trading hours settlement, right? So are we above that or below it? And
Hmm.
then that's my first fulcrum. Like I'm looking at that to see where we're trading in relationship to that. Are we inside the range or outside the range? And then so like that's a good question. That's a great question. So say like last night, if I'd have been at my desk, you see how Friday's distribution low came in at that 71.81 area that you mentioned.
Hmm.
So I would have been looking for a like a look below and fail of that level. And you can see that that trade kind of materialized at around 8:30 when we took out on I'm looking at a 15-minute time frame. We opened yesterday, we immediately traded as low as 71.50. We bounced up to 71.82 and then it
Correct.
moved lower. So I'd be looking at that 71.71, 71.82 high. If we got above that 71.81 high, I'd be looking to get long on that, looking for a reclaim of that Friday low pivot 71.81. That trade
Okay.
worked out really nicely.
So you're looking at the relationship of the open for versus the close, and you're also in the highs and lows.
Correct.
Okay.
Yep. So I'm looking for, do we do where was the prior days, you know, uh chunky distribution? Where are we trading in relationship to that? And can I, trade the trap, right? So
Hmm.
so kind of yeah, kind of like what I just described. I'm looking for that look below and fail or look above and fail. Let me just make sure that I have this right here.
Yeah, crude is coming off a little bit. I mean, nothing on a technical basis and technical structural basis that makes a difference. It's just pulling back. I don't know if that's putting a little bit, giving the market a little bit of a bid.
Yeah. Yeah. So that's a good eye because I certainly think that crude is definitely playing a role here in the daily oscillations. That's why it's always good to
Mhm.
have a guy like Rev around so you can share his thoughts on what the trade is there. But again, guys, scalping, like we said, right? The only level that mattered was that 71.81 on the downside. I scalped it long. I hope you guys did too. But be mindful that until we get that breakout above, this is probably the worst area to initiate a trade. All right,
Yep.
don't get chopped up. Don't go broke clicking on a Monday morning. It's going to be a bad week, guys. So just
I
be
was just going to
careful
say
here.
that you do that, and we've all gone through it, right? From an emotional standpoint of
Yeah.
Monday morning dictate the week, or you're just trying to catch up the rest of the week off of one or two trades on Monday.
Yeah, that's the worst, right?
Oh, yeah.
I have this statistic, from my own trading, and I highly recommend you track your trades or find some type of journaling system. I have a notebook journal, but I also use Journaly ticks. And you upload your CSV of all your trades, and you can find patterns in there. So guys, I found this pattern in my own trading, right? I found that if anytime I had 6 or more trades in a day, 96% of those days were red days, right? So immediately I'm like, okay, stop at 5. Right? Like, it doesn't matter how, if I'm red at 5, I'm not going to get green on 6. So I'm done. Right? And furthermore, here's another statistic I found. I found that when I have having a green Monday, I had a 67% chance of having a green week.
See, that's
okay. So then when applying that statistic, what I did was I would just, I'd hack it. I just look, you know what? I don't care if I don't make a killing on Monday. I just want to get green and stay there, and then look towards the rest of the week.
It's funny how those statistics, they come out, they shock you. Like, is that,
man, yeah. I mean, that's the truth right there, right? There's just no way you're going there's no lying in those numbers. And you can learn a lot about your own trading. If you want to look in there, that's where the truth is.
Well,
and you
as
can reverse
as being a baseball player, that's right in your wheelhouse, right?
Oh,
because
sure.
God, what sport has more statistics than baseball?
Yeah, it's a little nauseating, to be honest. Yeah, yeah. Okay, hang on a second. Let me just get it up here. So Stuart asks, please write that journal info here. All right, Stuart. Yep. Here's let's see. Let me just get the website up here without posting all of my account information, because I was actually looking at it, and that's what made me think about it. Here we go. Wait, is that it? Let me just see. So here's what I use. It's Journalytics. So look, guys, right? Chop. Right back up. Couldn't test the early high. We traded as high as, look, retest. We went as high as 71.9750. And now we're fading right back down into range. So thus far, we've traded below the open, above the open, back below the open, back above the open. Same could be said for the settlement, 71.94. So the one thing I'm doing here is I'm not trying to be too aggressive here. This looks like a scalp the edges day, guys.
Here's something to look at. I'm sorry, Manny. I apologize.
No, you're fine. You're fine. Go ahead.
No, I'm just kind of looking at crude. Crude went above Friday's close. And again, this is on a regular session in the futures. It went above this morning, Friday's close, or Friday's high, excuse me. And prices were rejected. So if prices start rotating back down, it's going to be somewhat bullish it should be, or the way it has been going, a little bit more bullish for the market. That may be a little bit of a catapult to push it higher. I'm looking at 90. If we get below the 94.48 level, or wait a minute, I'm sorry, let me move that. Let's say 94.50 ever. I guess that's close enough.
94.
So it may. I'm pretty. It should probably rotate down there. which will give a little bit of effort, a push to the market. So we may have a little bit of a breakout.
The probability stays strong here for chop.
Yeah. Oh yeah. Without a question. It's nothing saying anything different.
So so guys, I think remember the earlier scenario that we outlined in the morning as part of our pre-market prep. If that's the context, right? Mixed internals. If that's what we're looking at here, then we want to try to gauge the strength and the momentum of the moves when we get to those levels, right? So yesterday's high, overnight high. Let's see what happens there, and let's just be on alert for a move that fails to gain a following and a move right back into range for scalps, right? We already had one scalp off the low, 71.81. That one worked out nicely, even though it was an early exit on my behalf. Let's just maintain that mindset here.
Yeah, just really a very, very tight trading range.
Yeah, every time we get to the edges, we kind of lose that momentum, right?
Yep. That's
so another tactical takeaway from this, guys. If you enter a position and it doesn't gain following, cut it quickly. Don't stick around. Don't overthink it. Either it works or it doesn't. But either which way, I wouldn't expect too much out of this day. Thus far, okay, so overnight, we had a smaller range at 37 points. And thus far, off the open, we're at 18.25 points of range, all contained within Friday's range and within the overnight range. That is indecision. There are also, this is also a stacked week in terms of earnings, Fed decisions. I mean, it is a stacked calendar like we haven't seen in quite some time, right? So let me just take a look at that. We have Fed policy decision on Wednesday, the Powell press conference right after that, core PCE on Thursday, ISM on Friday, and we have all of these earnings.
Yeah, this is the stacked week for earnings. This is the, I think, where did I read something? 40% of the earnings, the market cap earnings, are coming out this week.
Yeah. Let's see if anything notable for today. Verizon, I don't know if
they came out this morning.
Did they? Okay, good. Yeah. The big ones that stand out to me are, on Wednesday, Amazon, Meta, let's see, Microsoft, Google. Jesus, Wednesday stacked.
Yeah, I know.
SoFi, Humana, look at this. Jeez.
But the earnings have been, it's what, a 13 point. I actually wrote it down. I thought I wrote it down. Yeah, they're running at about 13.2% above. So that helps. This is one of the better earning seasons in several years.
I think the market, is going to need good earnings to keep this run going. Underlying, I'm going to go out on a limb here. I typically try to stay away from this stuff on stream, but higher time frame, big picture stuff. I just penned an article for the opening print in Mr. Top Step. You should check that out at mrtopstep.com. And it's it's a mixed bag at best. But I titled the article, when the tape starts to shift, because there's a moment in every market cycle where things still look good on the surface, but underneath something changes. And I made an argument for why we might be there now. Structurally, we're in a shift, right? The hourly trend is still up, no question about that. But the internal book is starting to show pushback, right? So up at 72. Let's see, what number was that on ES? Because I do this analysis on SPX, so I just want to be sure I nail that level right. Hang on. Okay, so 72.30 to 72.40 on ES. There's so much resistance up there that I have it drafted as I'd sell that on the first touch. Every morning, guys, we put out 6 to 8 high probability setups. They frequently catch the high and the low, or the low of the day. Last week, 3 days out of the week, those setups caught either the high or the low of the day. And on one day, the setups that I put out at 8:30 in the morning caught the high and the low of the day. So a lot of work, a lot of study goes into crafting out those levels. Obviously, not many of them are in play here yet because we're still chopping around. And what I want to highlight is that there's in the book, there's internal pushback, for lack of a better term. This isn't the clean. We're not going to see the clean, impulsive move higher that we've been seeing. That's done. That easy trade is over, and it's starting to feel like a test of the highs. And I'm not saying that the all-time high is in by any means, but what I'm saying is that there's signs and there's signatures, there's clues that there could be potential distribution going on. Okay, so if you think about it, right? If say you were long this entire rally, say you were buying them on March 30th, I wrote an article for the opening print, and the ES was trading 6,400, and I made a case for why we should be seeing 7,400, and so since then we're up 13%. So if you're up 13%, say you're even up 10%, all right, at what point after a week of going sideways do you start to say, hey, let me take some off here? Let me take some profit and book it. I'll buy them back lower. I think that's prudent for anyone here.
Well, that's the trade management. That's the icing on the cake for traders. When you start managing the trades correctly, that's what makes a huge difference in your P&L. That's that gets you from a neophyte to somewhat of a pro. Where's your hat today?
Dude, I just found it. I just thought to myself, God, I'm never gonna make any money. I don't have my hat on.
No Mets hat?
No, we're Yankee fans here. So my dad was a huge Yankee fan. There's a lot of baseball in my family, and yeah, right. Reverie says, "Get it right, Manny." Yep. No hat, no money. So yeah, we're Yankee fans. I told my kids,
they can't win a game. Don't they have like the highest payrolls in the league?
Yeah, one of our.
I don't follow baseball that much, but
we were playing yesterday, and we were playing really well. And one of our parents said, "Hey, man, give these kids a shot at the Mets. They can probably beat them."
But don't they have like a really big salary cap?
I think they're like third highest or fourth highest in the league. So Yeah, they're not getting a lot for that right now.
Hmm.
I mean, Lindor had this trade this trade, gosh, had this play the other day. It's just terrible, to be a pro ball player, and he just gave up on the play. I saw the highlight. I didn't see the whole game. I can't stand to watch an entire game of. I don't watch the pros anymore. I watch the highlights because I'd rather watch high school or the younger levels. The college baseball is really, really fun to watch. So, hey guys, just a quick update here. We're unable to gain a following above that settlement price. You can see here we're just going sideways. Another stab up, right? Maybe to test it. I think that could be in store here, but more
Okay.
importantly, it's chop. It's chop, guys. There's just in a chop shop, you scalp the edges or you get chopped to pieces. All right, just don't mix it up. Right, don't try to trade from the middle.
Well, look at crude coming back, putting pressure on the market. So they're still kind of
Yep.
doing that seesaw action.
Yep. All right, hang tight right here, guys. Tom, I'm just gonna go use the bathroom. Give me 2 seconds.
Absolutely. I mean, look at gold's not really doing much. I mean, it's pulling back a little bit this morning, but that's also stuck sideways. And just talking about a profile distribution. Oops. I mean, possible again. If with trades using market profile, again, doing merge profiles, you're going back from last Tuesday. We're balanced, but this is obviously a very mature profile, and as Manny says, is trading the edges, and here we are. It's an opportunity maybe for about a 20 point on the upside on the bounce, but it's really not doing anything. So we could get a little bit of a bounce there if anybody's trading gold. You got a little E-mini's not doing much. Crude starting to test Friday's highs, excuse me. Or actually today's highs. But as we were saying earlier, understanding the personality of the trade day is hugely beneficial. It keeps you from getting beat up.
Yeah, that's sound advice, right? And so there's the common statement that we often hear, screen time in practice when it comes to trading, right? There's no substitute. You can't fake it. Screen time. You're gonna learn something. And I think that's what Tom's talking about when he says, learn the personality of the market you're trading, right? Screen time in practice is going to help out a lot with that. And then, on the other side of that is when you hit the the law of diminishing returns, right? Or the Pareto principle, in that once you have screen time in practice, then you need to start, understanding that you don't want to spend too much time staring at charts because you can that can come back to hurt you. But once you understand, so clearly, there's a wealth of it. There's a huge amount of experience right now in this room, and what we're kind of outlining comes from that, right? Of course, I want to trade, I want to make money, but the tone has been from the open, hey, let's watch first and make good decisions that follow, a sound logic chain. And thus far, we're just not getting anything other than choppy two-way price action. I had the scalp off of the 71.80. I think I took 71.83 to 71.86. Nothing too spectacular. It was a scalp. I traded two contracts. I took 2 points on the first, 4 points on the second. And I left quite a bit on the table there, but it's just I just wanted a small base hit, get me into the game, get me green on the day, kind of hack my statistics, and I continue to suggest to trade the edges. Remember where we are in the higher time frame, right? The one level that matters up here is that 71.80. We need to maintain bullish above, right? But then
correct.
Staying above it isn't enough. Like, are we gaining a following? And how bullish are we if we're above it, but we're unable to even test yesterday's high? So if think about it like this, guys, say the market was really bullish, right? We would have been above yesterday's high. It would have been ramping. We would have been off to the races. We would have had successive prints higher. We're not seeing that. What we're seeing is an 18-point range. We're still inside the overnight range. There's just, you can't squeeze water out of a rock.
That's right. And that's what we want to take is serious. That's, you've got that part of it is the juice worth the squeeze.
Oh, I love that.
Risk reward. And that's what it's coming down to is the risk reward there in a trade. If you're, looking for, a few points, I think did a great trade this morning. You had your levels, you bounce off of that. That's your job. That's what we're interpreting what the auction's trying to tell us. And that's all we're doing is we're whatever means that you look at, I market profile. Market profile is a tool to let me see what the auction is. And then I trade off what the auction is telling me. That's what we do.
Yep. I was hoping that we would get a test of even yesterday's high or even the overnight high and then gauge that move for a short trade right back into range. But we never got that high. So
you made a point, and it kind of dovetailed to what I said earlier is knowing what's the market trying to accomplish. Right now, it's trying to it doesn't look like it's trying to do anything, but is it trying to hit the highs? And if it doesn't have the ability to hit the highs, that's a warning sign, or vice versa. If it's trying to break new lows and it can't get down there, it means there's a stronger bid or stronger offer on the upside. So you take those in consideration as kind of warning flags of how the market is or how the auction is being interpreted.
Yep, correct. Good call there. Good call. Appreciate. Yep. I wish I had more to offer, but until we get a test up there, we're just chopping above here at this breakout here. So let's see. I'm not gonna. I want to keep us safe. I want to keep us on the right side of the trade.
Mm-hmm.
There's just not much going on right now. So Rev points out if or when the CL punches above 97.50 or so, the next level is around 114 to 115. Now there's some meat on those bones.
Yeah.
That's minimum what? $7.7 trade on crude.
Yeah.
Take that. Jeez.
Yeah, if it could do that. Crude has been, including so far today, we've been in the range of Thursdays. We've been balanced. Today's going to be the third day of balance.
Huh. we're right
And
back
for the
down again.
older traders, that's kind of was it a third day breakout of one of the turtles?
Oh, the turtle
Their
traders.
rules.
Okay, hey, so maybe you can remind me of what that is again, because I remember I read the turtle
Richard
traders
Dennis.
books. Yeah, Richard Dennis. Right?
Richard Dennis, he was, obviously a legendary trader. Said he could teach them, and that's what. So he got these guys and taught them different rules.
Right.
Put ads in the paper.
This
was in the early 80s or late 70s. Someone else, I'm sure, probably knows a little bit more than I do. But yeah, it was a really interesting story.
Yeah. So if I remember, so I read the book years and years and years ago. But
hey, Danny, good morning.
Yep. Okay. Danny points out in the Pitbull Traders chat that you knew Richard Dennis, right, Danny?
Now that's a story worth hearing. Hearing it firsthand.
ES continues to chop around 71.90, 50. I mean, this is as slow and as dull as it gets. Come on, guys, give me something to trade here. Give me some action. Don't they know that I'm live?
This was the same thing. I think last Monday. It was a real quiet day.
But like as you were saying, Tom, know the market that you're in, and we outlined that in the pre-market, saying that, hey, we gave clear if-then statements, right? If we do this, then we do that, and what we're not seeing is any of those statements materialize, and that's why I always cover the most bullish argument, the most bearish argument. I cover 2 trap trades, and then I cover the dreaded sideways move. I'm always hoping that that's not going to materialize, but that's exactly what we're seeing here.
That, you should really emphasize that. That is a process of what you're doing every day is critical. And, it's like anything else. We've talked about baseball and coaching, but it's the process, especially at this age. It's the practice process. The John Wooden type of attitude. And it's the same thing with trading. And you know what? For the people, the traders that are somewhat new, you do exactly what Manny's doing. You're leagues ahead of everybody else. That is, that should be underlying what you do. It should be mandatory for traders.
Yeah, guys, and that's why we kind of always highlight, the potentiality of the day, and we want everyone to, stay safe and stay on the right side of things. I also put out a good deal of, high probability setups. Those are posted in the Pitbull Traders chat. Those are going to be posted on the Pitbull Traders website soon enough. I think we're going to move them there to kind of have a place where the folks who are watching us on YouTube can go. The ones who are not in our chat, they can go and kind of use those setups to their advantage. They're high probability setups, guys. I'm super proud of that work. When you combine those setups with the execution clock, and if you learn to follow that system, I'm going to guarantee you're going to be profitable. If you're not profitable yet, you will be.
Yeah, it'll definitely accelerate the learning curve.
Right, for sure.
No, that really is. You should give a lesson on that. How to do that, set it up for new traders. I think that's a wonderful exercise that you do, and it really is. It should be.
Yep, and to Tom's point, right? So that's something that you can follow along here and learn every day, right? So every day we're coming on stream from 9 to 11. I'm outlining these scenarios for everyone to use to their advantage. You can use the execution clock. You can use the Spygate and all that stuff to your advantage. So always, hit that notify button, hit the like button if you're watching on YouTube. Don't forget to subscribe. Tons of value added materials here, day in and day out.
Speaking of, Spygate's been pretty quiet this morning, hasn't it?
That's a great point, because I don't have it open. Sorry, unfortunately.
So it's very quiet.
So I had it, but I don't have it on. I use the audible alerts there, which I think is key for that, and I didn't have the audio alerts on, but they're on now. Okay. All right, so getting it moved down now. Getting moved down.
Crude's pushing to the highs, obviously. But again, the tempo of the market is just like a Monday morning. It's just really slow.
Yeah, it's just really slow. We have an 18.25 point range, all contained within the overnight range.
Mm-hmm. Yeah,
don't click yourself broke out there, guys and gals.
Even the Russell, nothing. I mean, Russell's very.
Yep, that looks fairly. The one that has more of a directional bias is the Nasdaq, and that's kind of been trading lower. I think this could easily be one of those days that prices just it's just waiting on earnings, waiting on the Fed decision, and it's an early morning week. I mean, I'm sure a lot of smart, astute traders are taking the same approach that we are. Right? Let's just wait. Let's see how things play out here. Let's not rush in. And I mean, that's pretty much what we're seeing here.
I mean, it's as crude testing the highs, the E-minis testing the lows. We're towards our lower end. But I would imagine this is probably the tightest. This has got to be the tightest hour range we've seen. When you stepped away, I was talking about gold is very tight, and it kind of falls along the lines with everything else. Is it's getting down here where it's waiting for validation for it to possibly rotate back towards the 47, 44 area. So that's about a 40-point range. But again, I'm just looking for a little bit of validation in pricing.
Right. Yep. Okay, we got a pop here. I don't know if this is a news poppers or what the case might be, but I'm getting a little bit of a pop here.
Can't be too much. It just kind of died.
Yeah, yeah. Was there any news out? I didn't hear
I
anything. Let me know,
didn't.
guys, if you heard anything come through. We two ticked the high and then immediately sold back off. So be careful here.
Yeah, we're just dead. It's just not moving. Nothing.
Yep. Yeah. Yep. So weren't the turtles like trend followers? Like, wasn't it all based on a trend following system, if I recall?
Yeah, I know one of the rules, and again, uh, I think Danny's obviously much more the expert on this. But yeah, and they had different rules that they taught each of them, and yeah, they were. It was a trend file. That was my understanding. It was a trend file. I know one of them. It was the 3-day break. Is that if you've got, what were we looking at? The crude, was it crude? We were looking at, it had a 3. Yeah, so we were today. If we don't break above Thursday's high or low, that would be 3 days, and then you would run with a break. I know that was one of them, but Danny's the expert on this. He could probably tell you, volumes much more than I could. In fact, I don't know how many. I don't know if Danny's still there. How many turtles there were?
Yeah, and I remember reading in the book that, well, not in the book, but afterwards, how there were some how there were, like, several of them went on to find good success in
Yeah,
trading. Um, Not much to go on here yet, just yet.
yeah. This just doesn't want to give us any kind of hints.
He said Richard Dennis. Danny says Richard Dennis, who was one of the turtle guys, or the main turtle, blew up
Yeah,
Drexel funds.
good old Drexel Burnham.
Jesus. It was one of those stories out there. All right, coming back. Gosh, I mean, there's just nothing here, guys. This is that type of morning. You could have done something better with your time.
No, this is what happens. This is part of it's part of the game, right? This is
Yep.
the cost of doing business.
This is the day where having the execution clock really, really helps, right? Because you're going to want to use, not only do you want to stack your edges, right, but you have a a tool that tells you when to trade, when not to trade. That's posted in the chat every day. Again, that's also moving to the site, so look out for that.
Mm-hmm. I'm just thinking ahead. I'd go on at 2 o'clock Eastern and do a little, what the market structures are doing, pretty much towards the early afternoons. And boy, there's not going to be anything to talk about if this doesn't move. It's going to be quick.
Yeah.
Nothing here.
This kind of day you have to drill. You end up midday. You end up looking at a 1 minute chart.
Yeah.
Oh God.
Especially after your 7-hour drive last night.
Yeah. And I'm just kidding, guys. I don't look at a 1 minute chart. It make me too dizzy.
That's the thing.
The lowest I'll go is a 5 minute.
I know guys that's all they could trade.
Yeah.
That's, it's your personality. And that's one of the big things. As soon as let me ask you a question, man, is knowing yourself and a trader and modifying your trading to yourself, how beneficial has that been in your career?
All right, I'm sorry. Can you repeat the first part again? I was just reading Stuart's question.
As a trader, starting to learn your personality and trading according to that. How big of an advantage has that been?
Oh gosh, that and figuring out the like who I was and what I wanted to do. It was, because I want to say for the first couple of years, all I was doing was just following other guys, right? Maybe and it was when I kind of turned everything off and I dialed into who I was being, is when I started to find my way. And that's that's incredibly important, especially for profitability. And the second leg of that is also determining, is going to be determining your approach, right? How do you want to trade it? Where are you going to be a mean reversion trader? Are you going to be a trend trader? Are you going to be, are you going to scalp profits? Are you going to hold for larger targets? All that stuff you need to work out, because it's very hard to take any trade without that level of conviction.
Back in 95, I ran into a trader, and he started with a very small. This is how different things are. He started out. He had a small account, and he said, "I'm going." And I forget where he lived, but it was near where Sarah Lee. He traded one stock. That's all he did. He traded one stock, and he became a millionaire trading, a staple like Sarah Lee. It wasn't even a high-tech company that had huge ranges, and he just became a millionaire just being the very best trader on Sarah Lee.
Yep. I mean, who's to argue with that success, right?
No, but it's especially to the newer traders. There's a lot, much worse than it is when I started. You've got so many different strategies and so much information thrown at you. And when I started, it was hardly anything. A few books here and there. But now there's so much. It's probably very confusing, because I did a lot of running my head against a wall of, let's try this, let's try that.
Yep.
Make it generic. And again, just for the experienced traders know this. Make it yours. Make it a generic trading strategy that's yours, that has your personality, your fingerprints on it. You'll be a much more successful trader. You'll be much stickier with your strategy if it comes from you. You're picking one moving average of another. They do it a few times, you run into some problems, you throw it away, or the RSI or any indicator. But when it starts becoming yours, where you're putting the effort in, you're putting the sweat, that's when you stick with it. And that's kind of like your first cornerstone for your trading.
Yeah, I couldn't agree with you more. And you know, for me, like the tell was, you know, I could only hold, you know, once I figured out, you know, how I wanted to trade, meaning where I wanted to take profit, how I wanted to enter, how I wanted to exit, I started to learn that I couldn't trade anybody else's methodology or call because I wouldn't have any conviction in it. Like you have to have some conviction in your trade. Let's say, hey, I'm going to hold this because this is where I'm wrong. But if you're trading somebody else's way and somebody else's style, that's going to, you know, that's going to get kind of muddy on how to figure that out. And you're going to spin your wheels there for quite some time.
Yep. And that's what happens. That's, you know, that's the million cuts that you go through before you become successful.
Yeah. They're holding price right here, tight in range, guys. This is just, you know, chop. Like I said, scalp the edges. Don't look for directional movements. Let it prove itself first. Take base hits. Can easily see where we move a little bit higher, maybe test that yesterday's high, and then come back into range. Let's see. Yeah, there's just limited upside here with all that resistance sitting up there at, you know, 72.30. So even if we do get above the overnight high, I mean yesterday's high 7,200.
I mean, if you look at crude looks like it wants to hit new highs.
Yeah, that's a good eye.
It just, what was the level from 97.50 was his level. Oh man, I have music in the background.
Hey guys, quick heads up here. Since we're talking about crude, we're gonna bring Rev on, who's our resident, you know, crude trader. He's gonna come in here, share some thoughts with us. Let's see if we can get him on. Since we're so choppy, since we're so, you know, kind of sideways bound, just try to add some more value, more perspective. Any crude traders you'll want to listen in on this. Rev, unlike us, he focuses strictly on crude oil. He's been trading it for a long time. He's who I go to when I want to know more about crude. Yeah, look at this. We're petering out right below.
Got within a tick of it, of the high.
Yep.
And pulled back, but it definitely looks like it wants to try to push.
Yep. Looks like Rev is trying to get on here, so stay tuned for that. There he is. Welcome aboard, Rev.
Hey, how we doing?
Not too bad on this dull Monday morning.
Good morning, Rev.
It's not dull for crude.
Yeah, thanks for coming on. That's you know, it's really helpful to get some color from you about crude because the indexes are stuck in the mud.
Yeah, no worries. You know, I'm always happy to, you know, talk about, you know, well, talk with crude language. How's that? Figuratively and literally. So I was just chatting with one of the guys on our group in the back channels, and I've been asked this a bunch of times, and I kind of thought, you know what, you know, maybe this would be a great time to explain it to people because a lot of people don't understand it, and that's crack spreads. And I punch in here a lot saying that 3-2-1 crack spreads are rising, softening, whatever. Here's what that means, and here's how it works and why it matters for crude prices. When you take a barrel of oil, you refine it like one of the ways to refine it, and it depends on the grade that you're putting in, but is to turn 3 barrels of crude into 2 barrels of gasoline and 1 barrel of distillates. So 3 turns into 2 turns into 1, right? Distillates are things like diesel, jet fuel, kerosene, heating oil, heavier, blacker oil, whereas gasoline is higher value, more refined product typically. So what a crack spread is let's say a barrel of oil is $100, and that's the input cost, right? Well, let's back up. If you think of who the customers of crude oil are, there's only really one, and that's refiners. Yes, SPRs are the governments that buy crude oil for SPRs are a customer, but that's a different thing. And in the grand scheme of things, it's not that much. So if a refiner is going to buy a barrel of oil at $100, he needs to sell the products that produces at a higher price than that. So let's say that a $100 barrel of oil produces $120 worth of products, meaning gasoline and say diesel. The crack spread in that case is $20. So $100 gets you $120 worth of products you can sell from it. Okay.
Right.
So when you see the price of heating oil and gasoline going up, and you divide it, the calculation is 3 barrels of oil. The difference between 3 barrels of oil and 2 barrels of oil plus 1 barrel of distillates, when that starts to go up, crack spread is French for refining margins. It's basically the same thing. So when those margins go up, crude refiners, who are the big customer of crude oil, want more crude. When your margins go up, you want to sell more. So that's why when you see that go up, you end up with usually that's a demand signal, and they start to process more and they run harder. Each Wednesday, when the EIA releases its inventory reports, one of the things they also release is refiner utilization, which tells you how hard they're running. So when you start to see 3-2-1 cracks go up, refining margins go up, that means crude is in many cases very likely to follow. It's a great leading indicator. So if it's that simple, why doesn't everybody just do it? Because it's not that simple. But that's a good barometer for it. If you start to see crack spreads fall, in other words, refining margins narrow and crude is rising, that's usually a sign that you're probably not going to go much higher on crude, at least in the short term, simply because the refiners can't make any money at it. And when crude is at a historically high price with thin margins, that's a sign of demand destruction, meaning that, and demand destruction for energy is often a recessionary signal. So that's one of those things. When I post it in the room and talk with the guys in the room and the ladies, of course, we're getting a lot of those in, which are, I find, quite frankly, they're smarter than us on average. They don't make any of the macho man trades that a lot of us tend to, right? So, a lot less ego driven, which is a breath of fresh air, quite frankly. But the point is that when you have I've had a lot of people asking about what does that mean. So what I've just explained in simplest terms is why 3-2-1 crack spreads matter. And what that's how you can tell, whether a crude rally is durable or not. If you get a big crude rally, but refining margins compress, then that rally probably isn't going to last. But if you get a big refining margin rally, meaning heating oil and RD and HO are the two easiest ones to identify. If those rally and crude doesn't yet, there's a pretty good chance that crude will catch up.
Okay.
So that's
So
just
we're-
one of the tricks that we talk about here in the room. We talk about it on the front channels quite. We meaning me. I'm always yakking about it, but and in the back channels we talk about that as well. But it's just something that occurred to me that, if more than one person's asking it, there's probably more than one person that's afraid to ask.
Well,
So,
Rev, where do we stand right now?
go ahead, Tom. Sorry.
All right, Rev, where do we stand right now?
With what's the right now?
Yes.
$53, which is really effing high. That's
So you're
strong.
thinking. Okay, so let's start. So you're kind of thinking, or you're leaning towards a push in crude.
Yeah, like that's exactly what I'm saying, is that, like crack spreads have been rallying now. I'm just looking up at the top of my screen where it is, from 41.5 to 53 in the last 7 or 8 sessions. Like that is a very sharp rally. And if you look at crude prices, yes, they've rallied, but they haven't rallied that much. And so, so what I'm starting to see is pressure building here, where the Axios, whenever you see an Axios headline pre-market, it is like a money in the bank fade signal for me lately.
Okay.
They're trying to, I think they're being fed information and just posting it rather than verifying it. I could speculate to account why, but we deal with facts in here, and the facts are that that refining margins are strengthening. Demand isn't really going down yet, and crude prices are very likely to fall, are very likely to fill in that gap. So so Manny's always bugging me about levels. He's like, cool, that's a great story. Now, how about those levels, and where are you wrong? I'm glad you asked, Manny. Manny's so freaking disciplined that, he doesn't let me get away with that. So fair enough. And he's right. Here we are at, right around 96.5, where we've had, a whole bunch of resistance, and it sure looks like we're going to punch through it. The big tell is whether or not there's volume. The next stage after that is somewhere around 97.5, 98. And then I see 104, and then I see 115.
Where'd you get 97.5?
Sorry, Tom?
Where'd you get 97.5? That's what I was looking at. I wanted to ask.
Yeah, 97.5, 98. Those are the overnight highs for the last few days.
Okay, I got it. Okay.
Yeah, like Globex, Globex is a great giveaway for, I find the jawbone triggers tend to happen on the Globex session. Whenever we hit critical levels, that's when you suddenly start seeing the tweets saying that, oh, Iran's offered a deal that the US can't refuse, and and the Americans are going to pave Iran if they don't cave into their, it is just clockwork that you start seeing that on Globex. And that gives you, if you look at David Dubé's approach, which I think is a fantastic approach, except for some reason, stock index futures are kryptonite to me. If I make a recommendation, it's pretty reliable fade. But luckily crude not so much. But anyhow, the Globex session really gives you a great idea for what the daily levels are going to be. And so anyhow, to answer your question, Tom, that's where I get that from. I really do think, though, that we're going to see significantly higher oil prices. It just seems to be this pressure cooker building. I'm certainly not advocating for it. It's a lot easier to short oil than it is to be long it, because nobody other than a few countries, producers, really want to see great high oil prices, and even they don't want to see them too high, because it ends up leading to permanent demand destruction, which they don't like. So but that just seems to be what's happening right now. So where am I wrong? If we start seeing lots of volume and lots of selling, and it can't, the same things you always talk about, Manny, it really isn't rocket surgery, or rocket science, right? Nobody does rocket surgery, I guess.
You were right the first time.
It sounds smart, right? But that, you know, and it really would take some kind of a durable deal in the Middle East where people believe it over the long term. That really is a big deal here. You know, I'll extend it by one little thing here. One of the things that I'm watching is, you know, a lot of people are waiting for the quote unquote taco trade where, you know, suddenly the administration says, hey, we have a deal and everything's fine. Or excuse me, not that we have a deal, but that we're just picking up and leaving and letting the rest of the world deal with it because we don't care about Hormuz. Well, one of the problems with that is that that would completely screw Saudi Arabia and the Emirates and Iraq and, well, and to a less extent Iraq, but Kuwait, and all the Saudis would have to do is say, all right, fine. If you're going to leave, then we're turning the taps down because we have no way to get our oil to market. So we'll take 4 million barrels a day off, you know, off the global supply. And that'll send crude to $200. And the United States can't handle that, not over a long period of time. So that's just one of my theories of for example, Saudi Arabia, who's typically the OPEC swing producer, incentivizing the U.S. to stick around and finish the job. It makes me sick thinking about how messy this is going to get there, because there is no quick solution for it. And one other thing is that if you end up with Iran having a toll system for the Strait, you know, the other 7 or 9 choke points and straits in the world, shipping lanes, and not just for crude, but for everything, you know, they're all going to see that as a precedent and say, hey, they're charging a toll, we're charging a toll.
Yeah, I was going to say that then they can continue, right?
Yeah, and that effectively upends how global maritime navigation rules are, right? I mean, like you're
prices go high.
Yeah, that's right. That's exactly right. So anyway, those were a couple of thoughts just for people, you know, if you're trying to figure out whether or not quick news headline spike, you know, I joked about it before, the nacho trade, you know, nothing actually changes Hormuz opening. Like that's the ACHO trade that I'm actually keeping an eye on, is that, you know, does it change maritime flows durably? Because all these countries that have shut in production, you can't just turn that back on only to shut in again, you know, another 2 weeks later. Like you know, without getting into a big reservoir and well engineering speech, that they're not taps, right? So that's kind of, you know, that's sort of the quagmire that we find ourselves in. Oh, what's crude doing? Holy cow, this is the first time I've been on Manny's show and the price of crude isn't crashing. Imagine that.
Hey guys, give me 2 seconds. Yeah, I have to handle this phone call. I'm just gonna leave you with Rev and Tom. You're in good hands. Just give me 2 seconds. I have to handle this call.
Rev's been a great education. They learned a lot. I appreciate it.
Not at all. I mean, you know, I've learned a lot from Manny and Danny, and you know, the approaches that you guys use to trading, I've used to incorporate my own, which have helped. So, which has been a lot of fun, because anytime that you get better at the craft that you use to make your living,
absolutely,
you know, that's a wonderful thing. And I certainly enjoy all of your community asking me questions about it. It's you know, they say that if you really want to truly get good at something, teach it to a novice. And
absolutely.
Right. And not that there's, you know, too many novices here. There's a lot of really smart ladies and fellas here, but you know what I mean? It helps you sharpen your own thing.
Yeah, if you can't teach it to someone who's starting, then you don't know.
That's a great, you know what? I heard you guys saying something not a few days ago, Tom, that made a lot of sense to me about you know, if it's something about you know, if you can't explain it in a couple of sentences, you really should question whether, you know, how well you know it yourself. And I thought that was a salient point. So, you know, one other thing I thought I might mention is that, the inventory draws are going to really start hitting home this week and next, I think. Just my quick back of the napkin calculations. And once we see that, I think we're going to see the futures really start moving for all the liquids like heating oil, gasoline, and crude. So great comment, David. Iron sharpens iron.
Yeah, yes, it does.
And I love David's approach, by the way. I think rookies and veterans alike could learn an awful lot from that guy. He just puts things in such absorbable terms that are immediately practical. But that was pretty much all I had to say about crude. I just thought that, I was having a couple of back channel conversations about it and thought it might be helpful to the greater community.
No, I learned a lot, and I appreciate it. I should know more. Living in Houston, I should know more about it.
Yeah. I still learn every day, man. And it seems like it's like the old Don Henley lyric goes, the more I know, the less I understand.
Yeah. My wife reminds me of that a lot.
I think we can all relate to that. Is there anything else you want to ask before I hop off and
so
the airways, Manny?
Not sure if you guys can hear me. Can you hear me?
Yes,
I can hear you fine.
Okay, great. No, so what I wanted to ask was, do you trade around like the inventory releases? How does that change your approach in any way?
Yeah, like the inventory releases are great hit and run trades. We've talked about this on your show. Like, we've touched on it a couple of times where, like I use trend trades obviously for the longer time frames, use swing trades for the medium ones, and use hit and run trades either for event driven stuff or intraday. So on every Wednesday, sometimes on Thursday, if there was a short week previous, the EIA, the energy, like the U.S. government agency in charge of all this stuff, they release their inventory reports. Did we increase inventory? Did we lose inventory? And they also tell other things like I said before, refinery utilization, how much came from the SPR, how much oil is there where we don't really know where it came from, but we're counting it anyway. And it's not an exact science. It's actually a model. It's not an actual inventory count like in a convenience store. How many bags of chips do we have on the shelf? So it's not entirely accurate. There's a lot of speculation that, of course, the powers that be mess with it to, change perceptions. That may be true. It may not be true, but it's used. A trade that, used to really work well, it still works well to an extent, is, they like the big traders know that a lot of retail traders are watching those inventory reports. And if you get a bullish report, meaning a bigger than expected draw, they're going to start buying like crazy. And if there's a bigger than expected build, then they're going to start selling like crazy, right? Pretty straightforward. What often happens, like a super easy trade that often works, is on that Wednesday when it comes out at 10:30, you will get an immediate volume swell and a big reaction. Mm-hmm. And it's not a bad trade to just let that reaction happen. Wait till it sort of slows down anywhere from 5 minutes to an hour later, somewhere in there, and then fade it for the rest of the day. That trade has been arbing out over time, and the amount of money you can make on it is getting thinner and thinner as more people catch on to it. But especially for for really busy where crude is in the headlines, that trade still works. In the dead of winter, or like in what they call the shoulder seasons, it doesn't really move much. But I think that's what you're referring to, Manny, and that's kind of how to.
So you don't look now though, but we're up there testing that 97 band right now, and that's going to be that's obviously been a number to pay attention to. So if you guys are tuning in, if you guys are watching on YouTube, hey, heads up, crude oil is trading 97.06. This is pretty much, I would consider this a decisive point. Decisions will be made here.
Hey guys, I got to step out. Thank you guys both.
Yep.
I appreciate it,
Nope.
Rev. I appreciate the instruction. But listen, everybody, have a great day trading.
Thanks, Tom. Appreciate your input this morning.
All right, buddy. Have a good day.
Likewise. Take care. Yeah, for the folks watching on YouTube, do me a favor, hit that like button, hit the subscribe button. We're gonna building out the show. We're gonna continue to add value to your morning show. But that's for us. That's gonna call it a day here. We're gonna cut it down a little bit early. I have to go because I drove into town late last night. I have to go take my car to the shop, and I have to be there in 15 minutes, and it's 25 minutes away.
You can totally beat that. Andy, thanks for having me on as always.
No, thanks, Rev. Thanks for stopping in. Always appreciate it. Like we said, guys, Rev's our resident crude oil expert, and we have him come on several times a week to give us our insight. Pay attention to crude here. It just broke out above that 97 price, so heads up there.
Okay, see you, Manny. Best of luck.
All right, thanks, Rev. Appreciate your input. Appreciate it, buddy. Take care. Have a good one. All right, guys. So let me just wrap up the show here. As I said, let's mute him there. Make sure that again, to everybody watching, thanks for tuning in. Do me a favor, hit that like button, whether you're on X or whatever social platform you're viewing us. Just favor, hit that like button, hit the subscribe button. We're going to continue to build the show out and add value to everyone's trading. It's not just the indexes. We have crude oil experts. And we're going to continue to add a unique approach to trading, right? Where it's not just about time, it's about context. It's not just about price, it's about time, context, and share our experience, all with a focus on being consistently profitable. So once again, thanks for tuning in, guys. Appreciate your support.